Yes, thank you, Jack, so much. We are very, very pleased to have on Topstep TV John Kosar, the founder and chief market strategist of Asbury Research. John, welcome to Topstep TV. Let's get right into it. John, from April 1st to June 1st, we saw an incredible run up in the Nasdaq, an incredible run up in the S&Ps to new all-time highs. Since then, we've kind of been in a bit of a holding pattern. What's going to take for us to take another leg up for new all-time highs? Welcome aboard, John.
Nice to be here. Well, this is normal. The market swings back and forth between periods of indecision and periods where it knows where it's going. So we had a nice one of those between April and June. Now we're taking a break. And what happens is the market gets comfortable staying inside the lines. And that's where we are right now. So the question is, where are we? What stimuli do we need to get the market off the dime and either go up or down? And as of Friday, I've got a bunch of charts that I have brought. So the first chart is one of the S&P 500. Perfect. So this is exactly what happened. Bottomed on the 30th of March, got to June 2, started to grind sideways. If you're a technical analyst, I'm a CMT. I've been one for like 20 years. I think, since the Mesozoic era, and that is called a symmetrical triangle. And July 9th is when we broke out. It wasn't a ferocious breakout, but it was a Friday breakout, and that means something. If the market is willing to take the weekend risk, so that targets a move to. Let me see. You've got the sheet there, but it's a 4% move from here. I think it's 78.50. But in order for that to remain intact, the top of that indecision area, symmetrical triangle, if you happen to be a technician, is at 74.84 today. 74.40 is the 50-day. Notice how we tested the 50-day moving average 3 times during the month of June. So the 50-day isn't some kind of a magical thing. But what I want to know is, does the market care about it today or this month? And it apparently does. So we know where our risk is. Our risk is 74.84 to 74.40. The reward is up at 78.50. That's 4% higher. And in the middle, you got a lot of noise. I've been doing this for 43 years. What we've been doing, my son and I have been building investment models for the past 10 years. One of the models that we built just to be a daily EKG of the market's internal health is called the Asbury 6. And we've got a chart there. Boy, you guys are right on it. I wish everybody was that quick, of all the interviews that I do. You guys are on it. So what we did is we back tested a lot of indicators that I use when I was on the floor of the CME, my favorite tactical tools, and we started to back test them in sets of 2, sets of 8. We ended up with 6 that worked really good together like a hockey team. When your winger falls down, the center comes around and tries to pick up the check. That's what these things do for the market. Right now, 5 of 6 of them are green. It means they're positive. The numbers inside the cells tell you when that particular constituent went to positive. So we've got the rate of change, relative performance between stocks and high yield bonds, investor asset flows. We look at the AUM and SPY, volatility, trading volume, and market breadth. If that goes to 4 red, that means the patient's getting sick. And that's when you usually see the market start to stall and start to roll over. So we've got a breakout on Friday. Tentative one, still breakout. This is telling us, at least through the close yesterday, the internal health, the EKG of the market is doing good. The 2 things that I think are the most important here, and again, I don't day trade like I did on the trading floor. We're managing money and, we're writing research for individuals and institutions. So I'm really not kind of watching every tick like I did for 17 years at the CME. But I'm looking at 2 things. I'm looking at the NDX, which we have a chart of. and the
Question
SOX,
for you.
which we also have a chart of. We've got the
Okay.
NDX and the SOX, and I'll start speaking to the charts, and hopefully they show up here in a little bit.
Question for you,
So
John.
this,
John, really quick. I go quick. In terms of the internal market metrics, what did that look like back in March and February when the Iran conflict was in full force? Then we can go to these charts. But just out of curiosity, what did that the internals look like then?
they were mostly 4 or more red. I
Okay.
don't have the chart in front of me as to when they turned exactly, but they turned probably 20% into the move down.
Okay.
And there was some flip flopping in there because there was some flip flopping in the market. There was a lot of tweeting going on then, right? There was a lot of, there was a lot of, what do you
Uncertainty.
say? Trying to play the umps. There was some trying to play the umps going on there, but yeah, it was primarily red.
Okay, very good. Let's take a look at this the chart you got up here. What are we looking at right here, John?
All right, so we look at a lot of relative performance. A lot of times, it wasn't this way 20 years ago, but it is now. There's a lot of noise in the S&P 500, and most people look at that as being the market. So I look at relationships because you can manipulate a market. I know it's probably a bad word to use. The market could be thrown off sides for short periods of time. These relationships, it's harder because you have 2 moving parts instead of 1. So this shows the SOX has been outperforming the S&P on a quarterly basis. That's what 63 days is, since May of last year. Look, every time it came down and it kissed the 63-day, September 2, November 21, D17, and 2 times in March. That was a bottom in the SOX. That was also, if you check, that was a bottom in the S&P. So we are testing that again. That's most of the steady leadership that we've had throughout the beginning. The most steadiest of leadership that we've had since the beginning of the year has come from the SOX. This tells me, like that symmetrical triangle does, we're at an inflection point on a 1 to 3 month basis in the S&P 500 in the overall market. If we lose the SOX, we've lost a key piece of the leadership that's keeping this thing afloat. The next one is of NDX.
John, bringing the heat. John Kosar, bringing the heat. Founder and chief.
So here's NDX.
Asbury Research. Go ahead, John. Let's do it.
All right. I'm on a roll. All right. So same situation here. April 8th, NDX, which is big cap tech, started outperforming the S&P. We bottomed in the S&P at March 30th. Our models turned positive in between April 6th and 8th. This also occurred on the 8th. Look what it's doing now. It's sitting right on that 63-day moving average. So you've got 2 really big drivers of this move higher that are sitting on their quarterly outperformance trends. If we lose NDX and the SOX, what's going to lead us? The small caps have been doing okay. They're a little bit shaky. So this all ties together. Look at the coil in the NDX in the upper panel. You've got another period of coiling. So what I always tell my son is nobody knows what the market's going to do tomorrow or next week. So the next best thing is if we could define where the starting point, where the launching pad is going to be for that next trend, and it's right here.
Are you always bullish? Have you ever been a bear, John?
When I was on the trading floor, I was a bear most of the time because that's what everybody does down there. It doesn't make any sense to me. Now that I'm off the floor, I'm like, I must have been an idiot. I was down there for 17 years trying to sell a market that has been going up for 100 years. But no, I read data. I don't forecast anymore. Forecasting is for guys with nice suits and big watches to go on CNBC. I just read the data. If the data tells me, like the Asbury 6, the Asbury 6 tells me the market's getting weak, I'm paying attention. If the Asbury 6 tells me, it's not just one model, but the point is I want to see what the data says. And, to make a forecast for what's going to happen at the end of the year, it's crazy town. You don't need to do that. I can change my mind tomorrow. I could change my mind at 3 o'clock today. So I don't make forecasts. We don't make forecasts here. We read data.
On John, bringing the heat. John Kosar, again, the founder and chief market strategist of Asbury Research. Before we let you get out of here, One quick question. Well, of all the analysts and forecasters out there, which one do you know you can just straight up fade? They call out this forecast and he's like, fade them. Give me a
I
name.
would never do that. I would never do that to anybody. It's not professional.
Fair enough. Fair enough. Fair enough. And also for the folks out there absolutely loving this, where can they find more John Kosar?
AsburyResearch.com is where we're at on the web, but we have a YouTube channel. So if you go to YouTube and go to Asbury Research, tons of stuff there. I get interviewed a lot, do a lot of videos. If you like what I was talking about here, you can get more of that there.
Thank you so much, John. Thank you for joining us here on Topstep TV. With that being said, we're going to go to a quick break. And we got Dakota coming up after this. Topstep Labs. Thank you so much, John. We appreciate it.
You bet. It's good to be here.